Engineers in China just switched on a single strand of glass that carries 5 times more data than anything the rest of the world has. One fiber, thinner than a human hair, on a cable that was already buried in the ground. No new lines, no digging. A strand that used to take a half an hour to move the entire Library of Congress can now do it in about 5 minutes. This technology doesn't exist in the United States, at least not yet, and that's how fast this field is moving. And our data centers are starving for it, because AI is creating more data than our wires can possibly carry. Every hyperscaler in America, they're going to want this, and they don't want to build it themselves, they buy it. They buy the glass, the lasers, and the chips that turn electricity into light from only a few handful of suppliers that most of us have never even heard of. I had spent years on the buying side of the supply chain, and the pattern never really changes. When a new technology proves that it can work, the fortune goes into the companies that everyone depends on. It's not just the one that gets all the headlines. So today, I'm going to walk you through the entire Photonics chain and the public companies that own every piece of it. So why Photonics and why now? It really comes down to a single constraint, because inside a data center, all the chips have to talk to each other. And at short range, copper happens to be the winner. But the very moment that you try to push data past about 3 feet, copper really begins to break down, overheating and burning way more power the farther the signal has to go. But light solves all of it at once, traveling farther while running cooler and sipping a fraction of the power. And that switch from electricity to light, that's what photonics is all about. And it matters right now more than ever because every data center is racing from 800 gig connections up to 1.6 terabit, and 3.2 is already on the table. And then of course China reset the ceiling entirely with the fiber that I opened with. I'm going to cover the layers that matter most within photonics, and I'm going to focus on the part of this chain that usually gets completely skipped. It starts with the glass, the fiber, and the cable that actually carry the light. Then there are the connectors that link every piece together. There are the systems that light that fiber up, and they move the data across the building and across countries. And underneath all of it sit the materials and the test gear that make the whole thing even work. Now separately on the side, there's also chips and the lasers and also silicon photonics, and I'd already broken those down in an earlier video. So of course, I'll link that, and then I'm going to keep us focused on this area for today. Now, in each of these groups, I'm going to give you the names to put on your watch list. And I'll be straight with you, a lot of these have already had really big runs. So a pullback is definitely going to be your friend. In either case, you're going to want to get these on your radar now so that you're going to be prepared. And if you'd rather not pick individual names, there's now a pure play photonics ETF that didn't even exist a couple months ago. And I'll get to that at the very end. Before I jump in, if you're getting any value from my videos and my research, please consider pressing the like button so my content can continue to grow. Also, if you're interested in my entry points for any of these stocks, I try to share those on my Patreon page. We'll start with the glass itself, and the first name is Corning, the 175-year-old materials company that actually draws the optical fiber, the literal strand of glass from the top of this video, and holds the largest share of the world's fiber market at around 20%. But what really separates Corning is their technology. Their newest fiber packs roughly twice as many strands into the same physical space as standard cable, which is exactly what a jam-packed AI data center is desperate for. And their bend-insensitive glass is genuinely hard for anyone else to replicate. Add the world's largest fiber plant and US-made supply that clears the Buy America rules, and you get the real edge. It's why Corning is the named anchor supplier to Meta, Amazon, Google, Microsoft, OpenAI, and NVIDIA, all at the same time. No competitor on Earth has that lineup of relationships. And those relationships, they show up as booked multi-year revenue. Fiber demand is growing at about 22 to 25% a year, while the industry can only add supply at half that rate, with lead times past 60 weeks. So the hyperscalers reserve it years ahead and they prepay. Meta committed up to $6 billion. Amazon signed a multi-billion-dollar deal, and 2 more hyperscalers signed agreements of similar size, all booked years before the fiber is even drawn. And of course, here's what really got my attention. Corning's optical revenue grew 36% last quarter, but the profit from that segment, it grew 93%. That's more than 2.5 times the pace of its revenue. That's pricing power and scale hitting at the same time. Company-wide operating margin has climbed from about 8% 2 years ago to over 16% today. And management is targeting 20% by the end of this year. Now, the one honest catch, none of this is a secret anymore. So the stock, it's not really cheap. It trades at a peg near 3 and about 9 times sales, which is rich for a materials company. So Corning is your highest quality, lowest drama way to own the fiber. But you want to let the next pullback really come to you. Now we move to the connections, the parts that physically join every piece of this together, and the first name is Amphenol, the quiet giant whose high-speed connectors and cabling, both copper and fiber, plug into nearly every AI server rack that's being built. The thing to understand about Amphenol is that they're a relentless acquisition machine, and in January, they spent $10.5 billion to buy CommScope's entire fiber connectivity business, turning a connector company into a serious fiber player overnight. And the AI data center piece, well, it's now the engine of the whole company. It's their single largest segment, and it grew over 80% organically last quarter, and they're carrying a record order book of $9.4 billion, with more orders coming in than they can possibly ship. As their revenue exploded from about $4 billion a quarter to just over $7 billion, their operating margin actually expanded from 22% to nearly 28%. And watch what happens to their margins, because a $10 billion integration, well, that usually drags a company down for at least a year or two. And yet somehow Amphenol's went up. Their whole playbook is buying companies and quickly running them to Amphenol's own high standards. So a deal that size adds to their profits instead of weighing them down. And of course, unlike most on this list, the valuation is still quite reasonable. Amphenol trades at a PEG ratio of around a 0.7 and roughly 7 times their sales, which for a company growing this fast, it's genuinely rare. This is the broad, lower drama, growth at a fair price way to own the entire interconnect layer. You've probably noticed the quant ratings and the earnings transcripts that have been pulling up for the first couple of names. That all comes from one place, and that brings us today's sponsor, Seeking Alpha Premium. Now, I have built my own research process over the years, but Seeking Alpha earned a permanent slot in my workflow, and I've been using it now for the past 2 years. And there are 2 features that I lean on the most. The earnings call transcripts that let me search exactly what management said about guidance without having to sit through a full 90-minute call. Take Palantir, for example. On their latest call, I pulled the line where the CFO raised their full-year revenue guidance to the $7.65 billion range, which happened to be their largest raise ever in all of about 10 seconds. And the quant ratings I happen to use as a data check against my own read, especially where the model disagrees with me, because it's sometimes more important than just when it agrees. And the methodology holds up, because Seeking Alpha's back-tested quant strategy beat the S&P 500 every single year for the last 12 years. Right now, through July 7th, the link down in the description gets you $74 off premium, plus a 7-day free trial. If you're looking for serious help with your research, this is a great place to start. Staying in the connections layer, the next name is Credo Technology, the bridge between the old world and the new, because their proprietary low-power chip technology lets them squeeze every last inch out of the copper inside the rack while also building the optical chips and the cables that take over once the signal has to travel further. They just bought a silicon photonics company to round out an end-to-end stack that runs all the way to 1.6 terabit, and they now ship to all 5 of the largest US hyperscalers. Their growth is a little bonkers, because revenue went from $135 million a quarter to $437 million in just 6 quarters, more than 3 times over. And here's the tell that there's a real chip company hiding inside this cable maker. Their gross margin runs at about 68%. Now, that's the kind of number that you're going to see mostly from software, not from hardware. And their operating margin nearly doubled to 37% as they kept scaling. On top of that, they're guided for over 80% more revenue growth next year. Now, the risk here is real and it is specific. Even though they ship to all 5, just 3 of those customers make up 88% of Credo's revenue. So if a single hyperscaler pauses their orders, the stock is going to get cut hard. Insiders have also been selling heavily into the run, and at about 35 times sales, it is priced for everything to keep going right. With a PEG near a 1, the growth justifies a whole lot, but this is a high-conviction, sharp pullback kind of name. Now let's move up to these systems, the gear that lights the fiber up and carries the data between buildings and across countries. And the name here is Ciena, the Western leader in coherent optics whose proprietary WaveLogic technology was the first in the world to push 1.6 terabits down a single wavelength of light. That's the kind of cheat code that lets existing fiber carry far more without ever digging up new cable. And that one product has already won 49 customers in just 2 quarters. And the relationships that they've locked in, well, they're just as important. Their scale across design has already been adopted by 3 of the 4 largest hyperscalers, and cloud providers now make up almost half of everything that they sell. And of course, this is the number that matters the most to me. Last quarter, their backlog jumped by about $2 billion in 90 days to roughly $7 billion. Nearly all of it is scheduled to ship next year, which is more than a full year of revenue already booked. On top of that, as revenue hit a record, up 40%, their operating margin doubled from under 8% to over 15%. Now, an item here to respect is their valuation, because the market already knows all of this. The stock trades at around 120 times forward earnings, so it is priced for absolute perfection. Now we're going to get to my favorite part, the picks behind the picks, the companies that supply the suppliers, and the most upstream name in this whole video is AXT, one of only a handful of companies on Earth that grows the iridium phosphide wafers, the special crystal that every single one of those optical lasers has to be built on. I'm pretty sure that's the definition of a moat, because you can't just spin up a crystal growing operation overnight. And their backlog for this type of material, well, it just hit a record above $100 million as every laser maker scrambles for supply. Now, when it comes to risk, this company has to be towards the top, and the risk is very specific. Almost all of AXT's manufacturing is in China, and China now requires a government export permit for every single order, which already caused them to come up short on revenue last quarter, even with that record backlog just sitting right there in front of us. On top of that, they raised about $550 million that happened to dilute shareholders, and insiders have net sold over $70 million of the stock into the run. And on top of that, the company still loses money, though the losses are shrinking and the gross margins have climbed from 17% to about 30%. Without a doubt, I mean, the story is very real and the bottleneck is extremely real, but at roughly 66 times sales, this is a small, speculative lottery ticket position that a lot of people have asked me about, so I wanted to share with you exactly where they stand. And to close out this layer, the last name is Viavi Solutions, the arms dealer of the optical world, because every one of these fiber links, transceivers, and systems has to be tested before it goes live and monitored once it's running. And Viavi makes the gear that all of them have to pass through. The beauty of that position is that it's PIC agnostic. So it doesn't really matter which laser or which transceiver is going to win, because they all get tested on Viavi's equipment. Quite honestly, this is the kind of setup that I really love to find. For years, Viavi's revenue basically went nowhere, stuck at around $285 million a quarter. Then the AI build-out really hit, and their network testing business grew over 54% as data centers raced to validate all that new optical gear. Revenue has jumped to over $400 million a quarter. Their operating margin has climbed back into the double digits, and the whole business gets a high-margin kicker from a second, quieter division that makes the anti-counterfeiting coatings printed on the world's currency. The caution here is that insiders, including the CEO, have been selling steadily into the move. At a PEG ratio of around a 1.4, it isn't outrageously priced, but like the rest of the list, it has already run pretty hard. So once again, you're going to want to wait for it to cool off a little bit before you step in. Now, you might be wondering, where are the big photonic names like the Coherents, the Lumentums, the Marvells, the Broadcoms, and the foundries that actually make the chips? Those are the lasers and the silicon at the heart of all of this, and they absolutely belong on your watch list. But once again, I did a full dedicated breakdown on every one of them in an earlier video, and I'll link it right over here so that I'm not repeating myself. Today was all about the part of the story that others skip, the glass, the connections, and the systems and the suppliers that are underneath all of them. And like I promised, if picking individual names isn't your thing, there's now a way to own this whole theme all in one shot. It's in an exchange-traded fund, ETF, called FOTO, F-O-T-O, the Tuttle Capital Pure Play Photonics Fund. And what I like about it is that it's actually a pure play. It screens out the big conglomerates where photonics is just a side business, and it concentrates in the real optics names. Its largest holdings are exactly those laser and transceiver companies that I just pointed out, like Lumentum, Coherent, and Fabrinet, alongside IPG Photonics and InLight, with only 15 names in the whole fund and the top 10 making up almost 90% of it. So it is extremely focused, it's concentrated, and it leans hard into the pure play side of the story. Now, full disclosure, and of course this part does matter, this fund is only a few weeks old, so it has no real track record yet. It's still small at around 140 million under assets, and its expense ratio is 0.75%. So of course, please do your homework first, but if you want focused, one-click exposure to the shift from copper to light, Photo is one of the best ones to put on your radar. So let's go ahead and wrap this up. Copper is hitting a physical wall. Every data center on Earth has to move to light. And China just showed the whole industry how much further this can actually go. The money is already pouring in, and the only real question is which of these companies is going to capture the most of it as this shift begins to even accelerate. And now between these two videos, I think you have the entire map from start to finish. Now, I do want to remind you, I'm not a financial advisor, and I just do this for educational purposes. And as always, thank you so much for watching.